Hello, everyone. Thanks for joining and welcome back. Our guest today is my friend Peter Boockvar. Peter is the Chief Investment Officer with the Bleakley Financial Group. Welcome back, Peter.
Great to be here. Thanks.
Yeah, it's great having you on. I wanted to get you on to talk about, everything that's happening in the markets, all the craziness that's happening in the world right now, geopolitically, financially. But first, let's start off with, of course, everyone knows now about the news with between Israel and Iran and all the tension. How is that going to affect markets? What are you going to see that's going to happen to oil prices, gold, silver? What are your thoughts?
Well, sustainably, it's only going to matter if there's actually a disruption in the delivery of oil from that region. Um, I don't think it's in anybody's interest to have that. It's not in certainly Iran, since it's the main source of revenue. It's not in our interest to see a sharp rise in oil prices, and it's not in other countries' interest to see any disruption in the delivery of crude oil. So. If that does not happen, then I think that this bounce is probably fleeting. Now, that said, I do think in the low 60s, oil got way too cheap. We've seen, I think, 7 weeks in a row of declines in U.S. Rig counts. We're hearing from oil companies themselves talking about sort of peak, for now, peak U.S. shale production, both from in terms of a price perspective, but also from a geological perspective, and that even with OPEC raising quotas for the third time at about 411 barrels each time, that there really has not been any incremental supply coming out of Saudi or other countries there, which implies that maybe the quota increase was just meeting up with current production rather than raising current production.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Now, a lot of people have been talking about what happens if, Iran closes the Strait of Hormuz, and that's about 20 to 25% of the global shipping for oil and natural gas goes through there. What would happen, to oil prices? I know you alluded earlier to saying, if anything happens to the actual flow of oil, then you're going to start seeing some increases. Hypothetically, what would happen, and what would, the scenario play out if they did close the Strait of Hormuz?
Well, I don't think that they will. China's begging them not to, I'm sure, and it's not in their interest to lose that revenue, and that would get the U.S. involved. So you lose a quarter to a third of U.S. oil production flowing throughout the world, and oil is going to go to, I don't know, 100, 125, 150. Your guess is as good as mine, but triple digits is likely an easy go. But again, I don't think that that's going to happen. So at least people know where it is on the map now. Yeah, everybody knows what the Strait of Hormuz was. If they didn't know what it was beforehand, they can see all the countries that uh, put oil on oil tankers, and those tankers flew through that region and that area. But I don't think that Iran's going to be, um, maybe only in an act of desperation would they do something, but
Right.
that would be the end of the regime anyway.
Absolutely. Now let's talk about silver and gold. What is your outlook right now? From first, let's start off with silver. For starting where we're at right here. Obviously, a few weeks ago, or about a week and a half ago, you've seen a sharp rise in silver prices. Now it feels like it's been leveled off and around that $36 mark US. What are your feelings from now to the end of 2025?
Well, silver certainly has begun to play some catch up. It's certainly badly lagged at the price of gold. And you can also say the same with platinum, which I happen to be pretty bullish on as well. And finally, I think investors are beginning to find that these are important metals to own as well in this kind of environment. Now, less so platinum from an investment standpoint, more from an industrial standpoint. But even half the demand for silver we know is industrial. These prices remain well off its 2011 highs. Platinum got as high as 1900. Now it's about 1200. Silver, we know, is 50 versus 36 now, as you just said. So I still expect much higher prices for both. Platinum has an interesting dynamic, and that hybrids are sort of winning the war with EVs, and they use as much, if not more, platinum per vehicle. So I think that that's a pretty bullish bull case for the price of platinum. And silver again is just very cheap relative to gold and among other things. And there's still supply deficits, particularly for platinum, which is we're now probably in year three of deficits. Less so in silver, but those deficits do exist in silver as well.
What are your thoughts on gold? What's the outlook?
Gold, I think, still goes higher. I mean, trying to figure out where it goes from here is more difficult. But I think that the end of the bull market in gold is not here yet, and that the prices that does sort of end that bull market, I think, will surprise people. I think people are understanding the importance of owning gold as a reserve asset. In
Yeah.
fact, ECB last week, because of purchases and price appreciation, gold is now the second biggest reserve holding of central banks, uh,
Wow.
passing the euro. Now that also implies that a lot of the easy money has been made in the price of gold. Gold again can still go much higher from here, but it's obviously had an incredible move already. I'm still bullish, but trying to figure out like no one wants to overstay their welcome. But I do think that the eventual price will settle out much higher than it is now.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metals storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
Now, a lot of people have been talking about, the inflation data that just was released not too long ago, in about a week or so. And a lot of people are saying, what's Powell's next move? Is he going to reduce interest rates, keep them the same? Obviously, he did come out and say he's going to keep them the same. Do you think in the near future here, because of the data that came out, they're going to reduce interest rates? What are your thoughts, Peter?
Well, I think that the main catalyst for Powell leaning towards rate cuts with his tenure over in 11 months would be a rise in the unemployment rate to 4.5 or more. I think the inflation picture for him is still very murky to see how the tariffs flow through. And, now the price of oil is going to complicate things for him because now, if oil's at $70, $75, it's not going to have that much of an impact on inflation. But if all of a sudden it goes to 80 plus, at least on a rate of change basis, that can flow through gasoline prices, heating oil, and other things. So that certainly complicates it. I think in terms of the Fed meeting this week, I think he's going to be very non-committal, just as he's been non-committal. And the bond market is seemingly that way too, in terms of what it's priced in. It's priced in two rate cuts, but not one in June, not one in July, more so in the back half of the year, which I think maybe he'll give us a couple of rate cuts. But I'm looking at just rate moves as tweaks rather than the beginning where we've already seen 100 basis points of cuts, rather than this massive rate cutting cycle in response to an economic slowdown. We could have the economic slowdown. I do think we'll get a further rise in the unemployment rate. I just think that the Fed is going to be very limited in their ability to cut interest rates. And we have to ask ourselves, what are cutting interest rates going to even do? Because the experience with the last time they cut, long rates went up.
Right.
So I think it's very possible long rates go up again if they cut the short end.
What's your biggest concern right now, Peter? Whether it's geopolitically, financially, the markets, whether it's bonds, what's your biggest concern that you have your eye on right now?
I still think we're in a sovereign bond bear market. Then that That's what I'm worried about. I'm worried about the 10-year yield in the U.S. going from four, almost just below 4.5 to 4.75, 5 in quick fashion. Uh, we have to watch the UK gilt market, the JGB market.
Yeah.
I'm worried about tariffs and its negative impact on economic activity, which which if it resulted in an economic downturn, the budget deficit instead of 7% of GDP will be 10 to 12% of GDP. That's a scenario with the market already dealing with a lot of supply that you can have an economic slowdown and long rates actually go up because of that supply. So I think it's a tricky world, but it always is a tricky world. But it just seems more so now than what we've seen over the last couple of years.
Absolutely. Now,
Notwithstanding COVID, of course, which was a very tricky situation.
absolutely. Now, before you go, Peter, I'd really love for people to connect with you. I'm going to put your links in the description below, but where can people find your work?
So on my daily writings, I'm on Substack, the book report. People can type in my name and see my daily missives on the markets, the economy, and other things of relevance. And on the wealth management side, which we manage client assets, they can check out our website at bleakley.com.
Well, Peter, I want to thank you so much for coming down and speaking to the investing community, the silver and gold community. Everyone watching this, I highly recommend. Please check out, the Bleakley Financial Group. The link's in the description below. And Peter, as always, as the market develops, would really love to have you back on.
Would be happy to. Thanks, Ivan.
Talk to you soon.